Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Wednesday. It's May the 9th, 2012. We're going to look at the U.S. markets today, starting off with the Dow Jones Industrial Average. Yesterday, we were kind of warning that we did see some hammer candlestick formations in the U.S., but you didn't want to just be a buyer of those and hope for the best. You wanted to actually advance your stops and keep trading with the trend, which is currently down, and that turned out to be a good call. And we're going to show you some other charts and show you some things that we're seeing right now. This is moving lower. You'll see that this particular candlestick formation here is what we were talking about yesterday, little hammer candlestick formation there. However, this particular candlestick at that time is, of course, got a lot of sell pressure still in the mix, and you'll notice the actual size of this candlestick. There's a lot of volatility there. That's not typically how you see a hammer candlestick form anyway. So we had multiple reasons there to be questioning whether or not that was a legitimate reversal situation there. And we are still actually today going lower. Note the low point here versus today's low point. Overall, the overall chart here, we look at this candlestick, high, lower, lower, lower. As long as that continues to be the case, strong sell pressure is in control of that. You'll also notice it's confirmed by the lower low, lower low, lower low, lower low, again and again. That's again confirming the same thing. However, even though I see this low being taken out here, this low point being taken out, I'm not certain we'll actually close below that before we get a jump back to the upside. Now, in this particular chart, I'm not short. This is the only chart in the U.S. that I don't have a short position on, so it wouldn't kill me to see a move to the upside. I would actually prefer that, but it may just be wishful thinking. We are starting to see a slight increase in the volume here, but it's not substantial right now. We're just kind of drifting lower with Europe markets going lower, so we'll keep an eye on that. If Europe gets in more bad news like that, and you'll see us drift lower much faster. But the thing that I'm seeing here is we got 6 consecutive days to the downside right now, and that's why I'm wondering, are we going to get below this low before we see that bounce? Remember, 5 is the high end for the number of consecutive days to the downside before we start getting to above average conditions. Here you had 1, 2, 3, 4, 5, and you get a jump. Now we've had 6. I'm looking for a jump. I'd like to stay with it short. If you are short the Dow Jones, just continue to advance your stops lower, but be looking for that jump, and I will use that as a short opportunity when it comes into play. Let's have a quick look now at the NASDAQ. You can see we have already advanced our stop again to 1 cent above today's high. That's what we got our stop at right now, and she just keeps falling lower. And this one is actually a lot stronger chart for the downside argument than we just looked at the Dow Jones. However, this one is also showing signs of a reversal, a bounce coming. Again, it's just a counter trend bounce, but it is showing on the chart as there is potential for it. Yesterday we had this hammer candlestick formation, rather large, so I didn't really worry too much about that. But the number one thing that made me not concern myself with this bounce and seeing it as counter trend is that this low point, the low of that candlestick that we saw yesterday, was lower than this one here. So we've already taken out that low point. We've already proven that this was not a true strong support. We're now seeing that buy pressure is backing away from where it used to be. So the argument that, okay, we were here before and we rallied to this point and failed and sold off. Now we've come down to this same point. The idea that, okay, now we're going to rally and we're going to take out this high over here, that we're actually going to run up here and take that out, that's a flawed argument. You already tried it from this point. You failed to do so. So the concept that, okay, now we're going to do it and make it, that doesn't make a lot of sense either, especially with the news that we have going out of Europe and the fact that back here we had the benefit of a lot more of earnings that we don't have now. So what's your catalyst to the upside? I don't see it. We can get a bounce to the upside here. I would look at it the same way I would this one here, this one here, this one here, a short opportunity. That's it. If we do see that immediately, I will be looking for the next short opportunity being another shooting star formation like this or something of that nature, maybe one like here. But until I see that, I wouldn't get back in. Right now, we're still short. We'll keep advancing the stops lower until we are eventually stopped out from a counter trend bounce. One more item that kind of shows that we have this counter trend bounce brewing out there. Note the close of this candlestick formation here and the close of today's candlestick formation. This is trending down based on this closes. However, if we go up here to the ultimate oscillator and look at the low point here versus the current low point, or even if you go back a little bit, you can see that our low points here are trending up. What we're forming here is a bullish signal looking for a bounce. It's going to tell you that it's basically signaling you should look for a bounce because momentum is indicated as we're going higher while price is actually trending down. That's a bullish divergence. So it's the opposite of what we saw back here. Back here we saw a bearish divergence saying this was not sustainable. It was going to sell off. Now we're seeing the signs that this is not sustainable and it's going to reverse back to the upside. That can happen. Doesn't mean anything has changed in your trend. It just means look for that bounce. And so whenever you have a situation like that, you can find confirmation that way. So all these things are telling us that we are in that zone where we can actually get a really good bounce out of this market. So advance your stops. That's the most important thing. If you're short, just advance those stops so that when you do get that bounce, you get stopped out early, and then you can just wait for the bounce to peak out somewhere and we can get short again. Looking now at the Russell 2000 Small Cap Index, this one has got a tweezer bottom, basically two candlestick formations back to back, 1 and 2. Today's is actually weaker than we saw in yesterday's, but in any case, this is still a very good signal for those looking to trade to the long side. So you could see, again, that same bounce we're talking about in the other market averages. You could see this one showing the same sign that look for a bounce. However, rather than just be a buyer here, because we are making lower lows, lower point here than we have here or here, I would not just jump on it as a buy opportunity. If you are doing that, if you decide I'm going to take this as a buy opportunity, you can do that if you bought on this day or this day. Your stop is set off of this low, this 2 days ago candlestick. That's your low point. 1 cent below that, it's your stop loss limit. If she takes off to the upside, you'll make some money on the upside. That's good for you, but keep advancing your stop if that does happen. Right now, I'm still trading the short side, which is the direction of the trend. That's why we got lower series of highs, a lower series of lows, and I would stay that way until something changed. The main thing, I get stopped out. Until that happens, I would stay short. Do I see any potential here for a getting stopped out of my short position, and then because I'm not going to take a long position, does it mean that I'm going to miss something? I would think no, and the reason for that is very simple. All that volume, or not volume, but that resistance we've been talking about for the past several weeks, you've got major resistance here, you come up here and hit it again, you get a false breakout, you fail, false breakout, fail, false breakout, fail, you come up here to it again, you fail again. The idea that now we're going to start from this point and we'll go up here and we'll break through it, I don't see it. You failed at it too many times. You've got major resistance at this level. We showed you this long before it happened. Way back here, we told you that a breakout wasn't sustainable because on the longer term chart, you've got major resistance there. So I don't actually see any major move to the upside there. I think if you do get a move to the upside, you look for resistance to be at about the 50-day moving average, this red line right here. I think that's where you're going to start to find that resistance at. However, I will keep my options open. Right now, I see the major head and shoulders formation. We've talked about this for several weeks. You got the first shoulder formation, the head formation, the second shoulder formation. You're piercing this neckline right now, piercing of a trend line, or in this case, the neckline. When you do that, you dip below it, and even though you don't close below it, you intraday activity below it. It's a warning sign that you're going to break. The SPX or the S&P 500, you could probably trade in the SPY as well. We're still short this, advancing the stop to 1 cent below today's high. Continue to maintain that strategy, just following the short lower. Thing to note about this particular chart here is that you're not confirming that bullish divergence where you have, look at the low point here, and the close, I'm sorry, here and the close here, and you can draw yourself a trend line right there. But if you look up here at the corresponding time frame on the ultimate oscillator, you'll see a low point here, and then it goes lower, not on this today, but back here, you can see it actually goes a little bit lower right there, so you're not really confirming that bullish divergence formation that I showed you on an earlier chart. So again, I would stay on the short side. Don't be, out there trying to get the very first flash of hope on the bull side. Let the market prove it to you before you go long, if you're going to try to go long. Here's another reason why. Yesterday we talked about hammer candlestick formations, and you can see this low point here. It's where you would have set your stop off. If you had seen this and said, oh, I'm going to jump on it really early, and got over excited about it, and you bought it, you got stopped out, and you don't want to be doing that. You're going to keep doing that to yourself over and over again. It's a waste of time. What you want to do instead is wait for the market to actually start confirming signals to you. Right now, you're still got a high point, a low point, a lower high, a lower low, and that has been a continued theory here as long as we have traded in this past few weeks here. That is because sell pressure is stronger than buy pressure. We've already taken out these lows here, so we have confirmed high point, lower high, low point, lower low. The trend is obvious. It's down. Work with that, not against it. One last item to note would be the VIX, and we've been talking about this for a while. We've been telling you for the past couple of weeks that we see the supports on the major markets as being preparing to break down. We see a bigger move going lower. If that's going to be true, we should be able to look at the VIX, which runs the inverse of the S&P 500, and find confirmation. Well, we've got that. Last weekend, I believe it was, we talked about the VIX being actually finding resistance here, and you wouldn't break through that until you started to break through the support lines that you were seeing in the major markets in the U.S. Well, today you can see that we have actually pierced through that trend line there. So we're finding out that we can actually go higher here than we used to be able to. So that would translate to you can go lower now in the markets than you used to be able to. So that's important to note. Just make sure your charts are confirming one another, and our charts are confirming one another. We're making money on the short side, and I would stay that way. If you've not been to our free website at perfectstockalert.com, it is right there. It's 100% free, and all we ask in return, please refer a friend. Also, you can share our videos online. We don't mind if you do that. God bless, take care, enjoy your day, and I will see you all tomorrow. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.